Hello everyone, how's it going? In this video, we will cover Bed Bath & Beyond, trading under the ticker symbol BBBY. The market has been volatile recently, with many equities being up and down big time. So many people are interested in the stock BBBY because of the short squeeze potential. In this video, we will take a look at the stock from a technical and fundamental perspectives and determine what would be the best approach. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description below, as every help is greatly appreciated. So, over the past few days, the news have definitely been challenging for BBBY's fundamentals. Nobody likes to see, stores closing and the words putting under protection, that kind of things. So the company announced that they're going to shut down all the brick-and-mortar stores currently operating in Canada, one of their 3 key markets. So this news hasn't really been well received by the market, whereas I have to say, usually people are more lenient to that kind of news and even may perceive it as a positive event for the stock price. So why isn't it not the case here? It's very simple, because BBBY's going concern is put into jeopardy. So we are not sure if the company is still going to be here 12 months from now. Let's be very honest. And of course, to those wondering, okay, but what's going to happen to the shares? Is it going to dip to zero? Is it, is my position going to be completely evaporated? Well, you know what? First of all, everything can dip to zero at any time, right? The probability is always there. It's just a question of whether it's high or whether it's low. So that's one thing. The other thing is, as far as the stock price is concerned, it doesn't have to go to zero, but it can dip significantly from there. So let's say if tomorrow morning BBBY has announced that they will be declaring bankruptcy, well, obviously, this is going to tumble the stock price. Obviously, a lot of people are going to exit right then, right now. And obviously, it's going to go like way below $1, in my humble opinion. And whether BBBY will stay on, a public exchange platform and not go on OTC, this also cannot be guaranteed. But even on an OTC, it's not, it's not the end game for the company necessarily. A lot of companies were able to recover even when things were very dire, fundamentally speaking. And right now for BBBY, I would say that it's difficult. It's very challenging. They need to sort out the ongoing debt issues with the creditors. If they cannot reach an agreement, then it's probably going to go Chapter 11. What's going to happen to the store? What's going to happen to the stock price by then? I think that it's going to keep trading. It doesn't mean that the prices are going to be very generous, okay? But it's going to keep trading. So for the time being, I would say that this news has definitely hit the company very hard. And I was hoping to see whether they can stabilize around the $2 level. I would say that it's, mostly achieved, right? Right now, we're right below $2. So I would say that this price level, which is psychologically significant, is going to be something that we need to follow up closely. So Bed Bath & Beyond Inc. is a home goods retailer operating under the ticker symbol BBBY, and it was founded in 1971, currently headquartered in New Jersey. It operates stores in North America, covering the US, Canada, and Mexico. The company has a wide range of products for home, bedding, kitchen, and bathroom. They offer a pretty wide variety of products across different kinds of categories, and they have both physical stores and e-commerce platforms, providing the customers the maximum flexibility. One of the key strengths of BBBY is its strong brand recognition. Indeed, the company over the years has built a solid reputation offering a wide selection of high-quality products at competitive prices, helping it attract a loyal customer base. Another strength is the diversified business model. In other words, they sell online and offline, and they sell different kinds of products across different categories. So, BBBY has historically been successful in both business and also maintaining business relationships with suppliers and vendors. This allowed the company to secure exclusive deals and to maintain their existing supply chains. However, in recent years, the company has been facing some serious challenges, especially in the face of increasing competition from e-commerce giants like Amazon, and also the declining foot traffic in its physical stores. So, to address those challenges, BBBY focused on improving its e-commerce capability and also on store closures and cost-cutting measures. The company has closed down many underperforming stores and is currently still looking to cut costs by reducing its workforce, closing down distribution centers, and consolidate its supply chain. Those measures will help the company to become more efficient and competitive in the future. But with that being said, I'm not fully convinced that the company remains above the water level, because recently there are some rumors suggesting that the company could go under, or in the very least, the going concern assumption could be put under rough test. Over the past 5 years, Bed Bath & Beyond revenue steadily decreased, with a decline of almost 20% between 2017 and 2020. The decline in revenue has been also coupled by a decline in earnings, so the company has been reporting losses for several quarters by now. In terms of stock performance, BBBY's shares have been under serious pressures, having lost more than 70% of its value since the peak in 2015 and underperformed compared to the overall market. BBBY also faced increasing competition from e-commerce giants, as we mentioned previously. And also, the company has been facing the declining sales in its own physical stores. Now, the poor financial results are also affecting the company's capacity to continue its operations, or this is putting some serious threat to people's trust in the company's long-term future, if there is any. The current sharp decline in BBBY's share price is caused by this concern, also creating a great amount of volatilities. More than 40% of BBBY's equity is owned by institutional shareholders. The rest is owned by retail. This means that the stock has a relatively high volatility, also a potential stock to invest into in the long term if we overlook the short-term volatility. One key behavioral difference between the institutionals and the retails is their behavior and also their approach. They tend to have more access to corporate governance people, and they are more likely to vote on important matters and decisions. Additionally, institutional owners tend to have a longer horizon in play, so they tend to focus on the company's performance in the years or the decades to come instead of coming in and out over the next few weeks or month. So this is why I would say that having some institutional owners can be reassuring. But of course, in the particular case of BBBY, it could also suggest that they are simply not interested in dumping a position that could bounce back because of a variety of reasons that may not have anything to do with the fundamentals. And so far, I have to say, they are partially right, to say the least. One of the key catalysts that may explain the retail interest in BBBY despite the challenging fundamentals is the short squeeze potential, due to the significant short position that is currently stacked against it. There are currently around 73 million shares being shorted off exchange, representing about 55% of the short volume. This can support the theory according to which there is a concerted shorting operation from institutional short sellers against BBBY, probably because the fundamentals have supported this outlook so far. I consider that a short position size is significant and can be considered as a major catalyst and reason why people want to buy BBBY shares to begin with. The takeoff could be unrelated to the company's fundamentals, or I would say it has to be unrelated to the company's fundamentals. But simply, the equation of supply and demand can influence the share price and its fate regardless of how it's doing in terms of sales and profits. It's also important to note that the short interest is not a guarantee of a short squeeze, but nevertheless, it can be a very critical metric to look at. It's worth considering that the short sellers can have valid reasons for their bearish sentiment. And I would say that usually when people go to short squeeze, they are ready to assume unlimited potential losses. So this is why they are relatively sure of their shot, or they're relatively optimistic that they are right and that this company will tank further. So far, I would say that BBBY does give people a lot of reasons to say that yes, they are right, and yes, BBBY isn't doing so hot. And for this reason, I would say that going in, we have to assume that BBBY will not necessarily going to be a stock to invest into for the long term, at least with the current conditions. And I would say that the short squeeze would be one of the reasons why people might want to consider in trading BBBY shares, in the case there is a mass redemption of the short positions. So given all this, what is my personal opinion on BBBY? Well, I would say that I would recommend to pause the purchases and to start buying the stock once again when it's very clear that it's going to hold above a certain level. The certain level for me is going to be $2. I want to see this happening for a few days before I will consider to join in once again. We don't know if BBBY can reach an agreement in any sort of sustained manner. So it's going to be very important over the next few days and weeks to see if the market now believes that the worst of the storm is behind us. If they can make the market believe this, then perfect. If they don't, not only the future might not be very bright, it could also be shorter than we hope for. Okay, so right now, obviously, BBBY should be considered as a trading position, a short-term swing trading position, and not really an investment position. When things go back to normal, this is when we may consider to keep like BBBY around as a small investment position. But for the time being, things are way too uncertain and volatile for this to be a viable option. The maximum exposure I would recommend for BBBY would be 1% of your portfolio, which should be spread over several weeks.